All right, so in this video, I wanted to talk about how I shop around for the best mortgage rates. For this example, I'll just use the province that I'm in, which is Quebec. So I like to go to Nesto right away because from experience, I know they have the lowest rates. If I have a doubt, I can then use that rate and compare with other places, but pretty sure, or most of the time, they do have the lowest rate. So I'll go on Nesto website and I can just Google easily, just Nesto, and then I'll find here 5-year fixed rate. I like to look at the 5-year fixed rate after what's been happening with the variable rate going up. I realized that you should always, or I'm personally gonna always go with a 5-year fixed, no matter what, even if the variable is so much lower, even if I think that the rates are gonna drop. I'm always going to go with 5-year fixed. Now, the reason I was going for variable is because I like the flexibility of getting out of a mortgage with a variable. You just have to pay 3 months of interest. With a fixed, the calculation is a bit more complicated and you can end up paying way more in penalty if you close your mortgage early. So from now on, I'm always going to go with a 5-year fixed. If there's more than that, I would, as long as the rate is reasonable. But I think your mortgage payment should be a fixed amount that you're aware of, and that there are no surprises. Well, for me, I don't want to deal with that stress, and it helps you budget. If you have a mortgage for a rental property, well, at least you know if it's cash flowing, because you know that expense won't change. If it's your principal residence, well, even more important, you don't want to lose your home, right? So I'm always going to be going with a 5-year fixed. So yes, if you compare with Nesto right now, they've got 5-year fixed. If I look at see all rates, just to compare with Nesto. Now, you look at the asterisk, it's at the bottom here, it says insured loans. So insured loans means that you have to have a down payment that's less than 20%. If you put a 20% down payment to avoid that CMHC insurance, then you're not going to get the 5.49%. The interest rate is actually higher for loans that are not insured. But for insured loans, the rates are lower. Why is that? It's because the loan is actually insured. You're actually paying the insurance for the bank. The bank is protected. When you have a down payment that's less than 20%, the bank is protected by CMHC, and you're actually paying the insurance premiums for the bank, which makes no sense. Just another robbery. But, so yeah. When you have an insured loan, so if your down payment is less than 20%, you get the better rate. Now, you could technically negotiate this rate with Nesto, although I've noticed they're a little bit hard to negotiate with, but you could negotiate with them. It's just that any negotiation will come out of their commissions. So it's a little bit harder. So it depends on, I guess, the timing, if they want to make that sale or not. If they don't care about the sale, then they won't be flexible. But if they do, maybe they'll give you 5 or 10 points maximum. Maybe they'll give you 5.45 or 5.40 max from this rate for a 5-year fixed. As you can see here, 5-year variable is prime minus 1.25. So what you have to look at when you're looking at variable is you have to look at the rebate. I think any rebate over 1 is a decent rebate. Anything under 1 is average. So if you can get a rebate of more than 1%, it's pretty good. But so even with the prime minus 1.25, the variable is still higher. But people might take that if they think the prime is going to drop eventually inside 5 years. If they think prime is going to drop, well, they're going to get eventually their rate is going to be much better than the 5.49. Now, I don't want to make that guess or opinion or assumption. So even if I'm going to end up paying more, at the end, I'm always going to go with a 5-year fixed. Historically, variable has been cheaper historically, but just for the element of stress, I think it's worth it to take 5-year fixed all the time and never have to deal with 5-year variable. And if you have to sell your property and therefore close your mortgage early, and you have to pay a high penalty, maybe just keep it and rent it out until the mortgage ends, and then you could sell it at the end of the mortgage term. Because if you don't want to sell a property if you have to pay the penalty on a fixed mortgage. Now let's click on see all rates. So it brings me here. So it shows the different terms. We've got 2 years actually higher. 3 years 6%, 3-year, this is variable, 3-year variable 6.25. The years don't make sense. For some reason, 5-year fix is always the best rate and the most popular. So you can see 10-year fix. So if you want more peace of mind, you can go for 10 years for 6.44, which is pretty high. So you can see insured rate here. You've got the 5-year fix is 5.49. Now, if you have a down payment of more than 20%, so loan to value is between 75 and 80. So 80% of the value of the property is a mortgage, and the rest is equity. Then you'd be getting a rate of 5.74, so a little bit higher, about 25 basis points higher than the 5.49, which is insured. So with the insured, you could put 5% down payment, so you save the 15% down payment between the insured and the uninsured, but your interest will be lower, so your monthly payment will be a little bit lower. Might not be lower than the 20% down payment because you have less of a mortgage, but I do see one advantage to that is, first of all, you keep more of your money. In both cases, you're making a monthly payment, so just because you're making a slightly higher monthly payment with the 5%, but at least you keep 15%, and if worst case scenario, something bad happens and you end up losing your property, you won't feel so bad because you only put 5% down. Let's say you bought your house for 500, you put 5% down and you get a mortgage of I don't know what's 10%. 10% is 50, so you get a mortgage of 475 because you only put 5% down on a 500K property. But then you bought your property at a peak and then prices drop and now your property is worth 400, and for some reason you have to sell it because rates went up and you're unable to renew your mortgage because the new monthly payment is too high for you, so you have to sell your property. Now you cannot sell it at 500 because rates went up, so the value of properties went down. There's less people wanting to buy it, so you're in a hurry to sell it before the property gets foreclosed, so you're forced to sell it at 400, but you have a mortgage of 475. So if you sell it at 400, you still owe the bank 75K and you lost your 25K. Now, if you get it foreclosed, you won't owe anything to the bank. They take the property from you, but you lose your 25K. But imagine if you put more into it. The more you put, the more you could basically risk in this environment, I think. Unless your goal is to pay down the mortgage completely, and obviously the more you put, the better, because you can pay it down quicker. Hopefully this environment this is the peak of this environment. Hopefully we don't see even higher interest rates. And here you've got a different 5-year fixed rate, but they lock the rate for 150 days, so it's a little bit higher. You get the benefit of a locked rate for 150, so you could you still have time before you can sign your mortgage. So let's say you're still shopping around, but you want to lock in your rate while you're still shopping. Well, you get 150 days of a locked rate while you're shopping around, and as you can see, it's a little bit higher, not that much, but a little bit higher. And probably negotiable, but not more than 5-10 basis points, I believe. All right, so let's compare the 5-year fixed rate of 549 from Nesto for the insured mortgage. So if you put less than 20% down. Oh, by the way, if you put 35% or more down, you get a good rate as well. Or as you can see, 35, you get 5.54. So almost as much as the insured rate. So to get a good rate, you either put 5% down or 35% down. Anything in between, or anything between 20 and 35 you get a higher rate. So another good website to compare mortgage rates is RateHub. So let's look at Quebec mortgage rates. It's loading. All right, so you can see here, I've got my scenario here. I've asked for fixed rate, and 5% down payment. And it's giving me here best rate here. So this is featured. I guess it means sponsored. So I've got 5.64, trust company. So this is probably like a virtual bank. Canwise is a broker, 5.79. Now Canwise usually has the best rates because they will cut into their commissions to give you a better rate. And this is the best rate they can give you is 5.79, and I'm sure it's after cutting into their commissions. So that's why I'm telling you, I think Nesto has the best rates. Otherwise, usually CanWise can usually beat them. But maybe if you call them, maybe you can get a better rate. But here's what's displayed right now: it's 5.79 for an insured mortgage, so where you put less than 20%. TD Bank 5.84, RBC 5.89, BMO. Let's look at First National. Usually First National is usually pretty good. MCAP, I really like MCAP. Great service, but yeah, the rate is not the best right now. We've got CIBC, Canadian Lenders. This is quite vague. I don't know if that's actually a bank's name. 5.64. National Bank 7%. Why would anyone go there? Desjardins as well. Great service, but rate is too high. But yeah, Desjardins, MCAP, I really like their service. But yeah, right now the best is it's the big six banks or CanWise. Actually, this might be CanWise, but it doesn't say which bank. But this might be CanWise, and if you inquire, I think you have to put in your information. They call you back. Yeah, this might be CanWise, and they'll deal with one of the big banks for you, but they'll cut into their commissions to get you that good rate. Let's see if I put 20% down. Let's see if they're able to adjust. Let's see if it changes the interest rate. Yeah, as you can see, when I put more down, when I've got a 20% down payment, I get a higher rate. So CanWise 6.09% and 5.94 for that trust company. So yeah, you can definitely see that Nesto is better in this case. And finally, a big broker here in Quebec is Multiprêt. I'm pretty sure they're going to be high here. We could already see the rates from outside. So fixed in Quebec, we've got the 5-year fixed 5.74. Not bad, actually, not that far off. But is that for an insured? Is that for an insured mortgage, or what does it say here? Doesn't say, but most likely they're always going to display the better rate, and the better rate will be for the insured mortgage. Let's look at the variable. 6.25 variable. Well, Nesto for the variable we had 5.95, so it was a better rebate with Nesto. So yeah, so that's why I just like to go straight to Nesto. Service wise, I'm not sure if the process wasn't as easy as Desjardins. I mean, applying for a mortgage with Desjardins was so much simpler than with Nesto. But when you want that good rate, you just have to accept it. For example, Nesto, they asked for so many documents and things like that. Desjardins was so much simpler. They didn't ask for that many documents. So the process was less of a hassle with Desjardins, but Desjardins rates right now are way too high. And right now, every basis point makes a difference for sure, right? So yeah, so just want to share with you how I find the best mortgage rates. And don't forget, it's negotiable, but it really depends on the person, right, on the other line, and it depends on the timing. If they're at the end of the month and they have if they have an incentive to sell a certain amount of mortgages per month, and they're not that far off, and they really want to close that, they really want to reach that quota, for example, maybe they'll accept a few basis points lower just to close. So it really depends on the mood of the person, I guess, or the timing. But usually they're not that negotiable because they know they have a pretty low rate. All right, so if you actually have any other suggestions, I'm open to hearing them. I just want to share what I'm using. Please leave in the comment section below. Thanks for watching.